Nigeria, Eastern Korea, and also HR verification as a service and governance, risk and compliance. Also led one enterprise NFT marketplace for an automobile company, and also working with Ministry of Education in India, building world's largest educational metaverse by name Polyversity. And also as a subject matter expert, I upskilled like 200 plus fintech leaders across the banks of Singapore through Institute of Banking and Finance, Singapore, but also 1250 plus product leaders and working professionals in blockchain. And my expertise lies in terms of blockchain strategy, solution architecture, implementation, and go-to-market. Coming to the presentation today. So what is a timeline, Chairman? Like, what is the time we have? Sorry, you're on mute.
We have an hour for this.
Okay. Okay. Yeah. Thank you.
And okay. If Anju and your session is combined, so if Anju is not able to, if she's able to join in the midway, we'll adjust accordingly.
Okay. Okay. Sure. So I'll make it like say 40 minutes or so for the presentation, and then 20 minutes or 15 minutes we can get into Q&A. Okay. So coming to the session, the intent is, or the agenda for this presentation is to introduce you to this technology called blockchain. And of course, I'll set the context in the lines of how blockchain as a technology is changing the way accounting is being done. And as domain experts in accounting, obviously, when I talk about the domain, I'll be talking in a very 10,000 square feet view. But of course, I'll throw more deeper insights on how blockchain as a technology can impact the way we do accounting. And coming to the first question to ask is, how many of you already heard about this technology called blockchain, and what's your understanding? You can quickly put it in the chat. Okay, let me ask in two steps. One, how many of you heard this technology called blockchain? Just put yes, 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 yes. You can put it yes. And what's your understanding? So the people who said yes, your understanding in just half a sentence. Quick few words. I don't know if you are putting in Q&A or, oh, okay. Put it in the chat. Oh, chat is disabled. Oh, okay. Okay, fine. Okay, not much understanding. Yes. Okay, so I assume you have some understanding of blockchain. But anyways, I kickstart with the foundational questions about blockchain. That is, why blockchain? Now, today we are in industry 4.0 and we are in web 3.0 with respect to the technology landscape. So we are in the third iteration of web, World Wide Web, which we use today. And we are in the fourth iteration of industrial revolution. And blockchain as a technology plays a very vital role in this industry 4.0 and powering this web 3.0. As you have already experienced today, governments and businesses are increasingly becoming digital. And across the world, post-pandemic, everything is being, happening digital. Even we are working from home, and the way we do work is also being captured digital, right? So in that context, there is a lot of digital transformation efforts happening across the world. But meanwhile, there is also one challenge which is happening across. That is, every 4 seconds, one cyber attack happens in the world, in the cyber world. And that attacks can be insider attack or external attack. So you might know what is insider attack, like cooking the books, or someone who has administrative capabilities with respect to accessing the data of an IT system can change it. That is insider attack. Whereas external attack is when an external hacker attacks the data. So today, every 4 seconds, one or other cyber attack is happening in the cyber world, and the need for digital trust has become an imperative, because the value of the data and the value of the business happening in digital world has grown significantly to trillions of dollars of value. And in that context, we can't go with the same IT infrastructure or the modalities or the governance models which we have been using. And in that context, to bring that digital trust and data integrity, blockchain is a technology which is being pitched as a potential candidate. And of course, blockchain is very young technology. It kickstarted sometime in 2008, but it is evolving very rapidly. And it has created an exciting possibility called as data immutability or data permanence. Now, when I say data immutability, that means tamper-proof data. And as all CAs and accountant professionals or management professionals, you know, the data integrity is one of the very key critical thing when you're dealing with the business transactions and the commerce and the financial transactions especially. And in that context, blockchain is the next technology on which you will be typically working on for doing all that accounting. But the nature of your job will be changing typically, or the way you audit the financial transactions or the commercial interactions will be drastically changing with this technology. But someone asks you why blockchain, then the answer is digital trust and data integrity. And blockchain creates this tamper-proof data or ability to create tamper-proof bookkeeping, okay, so that no one can tamper the data, because the human intervention is removed from the way the data is managed or governed. And of course, the next question is, what is blockchain? Now, blockchain is sometimes called as Internet of Value. So then you might ask, okay, then what is the internet which we are using today? It is Internet of Information. If you carefully observe, before 1990s, when there is no internet, if you want to share some information with someone, we used to send it through a trusted third party called postal system. So you write it, you pack it, and then you put it in the postal system, and postal system acts as a trusted third party, and the other party on the receiver side will be receiving it. So now what happened with internet? So in 1990s, when we saw the first, the evolution or the kickstart of internet, which we use today, internet is an open network of computers on which people can set up their servers and can communicate peer-to-peer without involving trusted third parties. That means on an open network, I can do peer-to-peer exchange of value. Peer-to-peer exchange of information. I can just send out a mail just like that, or I can just send out a message without depending on a trusted third party. Now, when I say trusted third party, you need to understand that you are not doing it through trusted third party, rather on an open network through encryption and decryption of the data. You are able to send information on an open network, and only the intended receiver can view it. So that is the Internet of Information which we have been using all these days. But then came this new technology called blockchain in 2008 and has initiated the new era of internet called as Internet of Value. Now, again, if you take the traditional banking, now let me ask you, before 2008, without involving your bank, can you move money digitally? Answer, please. You can put your answers in the Q&A if at all you don't have access to chat. Without involving your bank and without involving the central bank issued currency, can you move money digitally. We all know physical currency transactions are anyways peer-to-peer. And they are peer-to-peer. You don't need trusted third party to give money in physical cash. But if you want to do digital transactions, then you need an intermediary called as bank. So like how if I need to depend on postal system to pass information in past, I should depend on bank to do the digital transactions or to move value or money. But then the first application of blockchain came in the form of Bitcoin or a cryptocurrency. Of course, there is a lot of speculation and regulatory issues and lots of things. I will only talk on the technology side of it. Now, Bitcoin is essentially a concept where you are doing a peer-to-peer exchange of money or peer-to-peer exchange of value without depending on any intermediaries. Now, what is the benefit of that? What is the intent behind doing that? The point is, today, if you want to do a cross-border payment, yeah, Chairman, please.
Nothing. I'm just trying to.
Okay. I just saw your raised. Okay. So the point is, today, if you want to do a cross-border payment, as per World Bank, the cost of transaction, the cost of conversion, the cost of processing, everything goes to around 6.98% or approximately 7%. That means when you move money from one country to other country, 7% of its value goes off. But if you take a transaction through a new or alternative medium of exchange of value called so-called cryptocurrencies, then the cost of transaction and the processing and everything goes less than 1%. Now let's talk only with respect to the operational efficiencies. Of course, there can be some questions. You can put it in the chat. I will address at the end. But technologically, blockchain as a technology could create a open network of computers where people can do transactions on something of value, which is represented as cryptocurrency. But of course, like how email is to internet, cryptocurrency is to blockchain. That means like how email was the first application of blockchain, Bitcoin or cryptocurrency is the first application of blockchain. That's it. So email is to internet, crypto is to blockchain. But you can't say cryptocurrency is equal to blockchain. That is a misconception or a myth. So the point I want to highlight is, though cryptocurrencies was the first application of blockchain, eventually blockchain caught up with many other industry use cases across the industry verticals. Today, a university certificate is being issued on blockchain. A land record is being issued on blockchain. A stock of a company is being tokenized and represented as a token on blockchain, and people can do transactions on top of it. A physical land is tokenized as NFTs called non-fungible tokens, and people are able to own a particular token, which is representation or which is the ownership of a piece of land, fractional ownership. So stock of a company is being tokenized. And even in a supply chain, a product has a serial number, and that serial number is being attached to that product. And whenever there is a transfer of ownership of this product from manufacturer to distributor to wholesaler to retailer, all these transactions are captured on blockchain. So don't think, when I say internet of value, don't restrict it to money. Money is only one of the unit of value. But blockchain is internet of value, which facilitates transactions on anything of value. It can be money, it can be stock, it can be corporate bonds, it can be central bank reserves, Because today central banks also came up with central bank digital currency. What is a central bank digital currency? It is the tokenized form of the fiat currency which we use, represented on blockchain as a token. But the only point is this token is launched by central bank. That is why it is called as CBDC. But if the same thing is issued by a private player, people use token. If the same token is issued by a public infrastructure called public blockchain, then it is called as cryptocurrency. But at the end of the day, who is issuing that unit of value is only changing, but the nature of execution remains the same. And Alibaba very recently in China started tokenizing the intellectual property, all the IP and all the patents they have. And any company who wants to use that patent will pay royalties through a smart contract on blockchain. Of course, I'm throwing some technical terms. I will explain them in step by step, but I'm setting the context for you to understand what is blockchain. So blockchain is internet of value, where anything of value can be represented as a token or as an asset, and people hold wallets and they do transactions peer to peer. And who maintains the ledger? It is maintained by the internet, the network of computers who are part of that blockchain. So it may be a little tough for you to visualize. So let me put it this way. Say, for example, today you are using Gmail. Yes, Gmail. Now, when you open a Gmail account, right, you have a username, password. And whenever you log in, there is a backend server who is authenticating you. And second, whenever you write a mail, compose a mail and you send it, that data or that mail body or the data is stored on a Gmail server, which is giving that service and sending it to the respective user. And the respective user also has a account through which they log in and they decrypt and they view it. Okay. Now, similarly, on blockchain also, you have a wallet. So every account is called equivalently in blockchain as wallet. Like how email has username, password, in blockchain applications, users will have wallet. Now this wallet has a public private key pair like username, password. That means only owner of the wallet can log in and can do transactions. And how all the emails of an account are managed on the server. In blockchain also, all the transactions associated with a wallet are stored on a network of computers. That's the only difference. In our traditional applications, there is a one server in the backend, but in blockchain, there is a group of servers in the backend called a network of computers. That's the only difference. So now there is also another way of putting or defining blockchain called as triple accounting system. So I'm sure you might have heard single entry accounting, and as CAs or accounting professionals, you might have also heard about double entry accounting. But blockchain facilitates a new system called as triple entry accounting system. And you might wonder, okay, there is a debit on credit. Now, what is that third entry, or who does that? So this is something which I will demystify in coming slides. But if someone asks you what is blockchain, it is called as internet of value. Now, so let me talk about IT topologies or IT applications. Again, because we are talking about technology, we should talk about the IT infrastructure. Now, today, there are three types of topologies or IT backends. Okay, centralized, distributed, and decentralized. Now, what is decentralized? In a centralized system, there is only one server. And who owns that? The company who owns it is governing it. And there is an admin who governs it. So with respect to governance and ownership and control, because one organization is controlling that infrastructure, it is called as centralized IT system. Now, in terms of accounting, let me tell you, say there is a company, a corporate company, and they are managing all their bookkeeping in their centralized IT system. Okay, that is centralized IT system. Like your traditional ERP applications, which have the finance, SAP finance module, which captures all the accounting in a on-prem server. So that is centralized IT system. Now, let me ask you one simple question. One, if that server is maintained within your org, can an admin change the data without notice of anyone in the system? Yes or no? Can an admin change the data without notice of anyone? The answer is yes. Okay, let me tell you technically, yes. An admin is the one who can change the data, remove the data logs comfortably, and make sure that the system looks intact. Please understand. Because in traditional IT systems, or the IT systems which we use today predominantly, the trust is on the governance of the organization, plus the trust is on the admin. Please understand this. So an insider attack can happen if the administrative or if the people with administrative controls change the data. But an external attack also can happen where a hacker can attack the server and change the data. Okay, so a centralized IT system has single point of failure. An insider attack can happen or an external attack can happen. Now let's look at distributed IT system. Now, if you look at a distributed IT system, like say an MNC company. So you might have worked with MNCs who have multiple companies across the geographical locations, and they have different entities at each location, but they have a centralized system who manages all the accounts. So just assume that. Now, in that context, reconciliation has to happen with all the subnodes to the main node, and anything coming to the main node only is confirmed as settled, or whatever comes to the central node is confirmed as the final. But here also there is an admin who is governing it, and with respect to data integrity or trust on the data, the trust is on admin. And here also there is a single point of failure or an external attack possible. So in centralized IT systems and distributed IT systems, which we typically use for accounting today, they have single point of failure. But now let's look at blockchain in a decentralized IT system model. In a decentralized IT system, the nodes are maintained by multiple stakeholders. That means the whole infrastructure is not controlled by one organization. Rather, it is under the ownership of multiple organizations. Say supply chain, for example, the nodes are maintained by only the supply chain stakeholders. Okay. Or say there is a central bank digital currency. Now central bank will maintain one node, all the banks, non-financial intermediaries, financial intermediaries, fintech companies will maintain nodes in that CBDC network. Now you might have a healthcare network. Now in that healthcare network, hospitals, diagnostic centers, health insurance companies, and the regulator of healthcare will maintain the nodes in the network. You take a trade finance network, all the buyers, sellers, and the banks who facilitate trade finance services will maintain the nodes in the network. So all you need to understand is the nature of IT system in the backend is changing to decentralized model where multiple stakeholders maintains the nodes in the network. And the beauty is every node in the network maintain the whole copy of ledger of transactions happening in the network. That means every node knows what is happening on the network. And second, all the nodes maintain the same copy of ledger of transactions. One. Second, any new entry happening into the system can happen only when all the nodes in the network agree to it. It is consensus driven. So all the stakeholders have to agree with respect to an entry. Third, there is no admin concept in blockchain. Then you might wonder, oh, okay, then who is governing all the systems to work? A protocol. Blockchain has a protocol governed administration. The protocol has all the rules with respect to the administration, and all the logic is codified, all the business rules, accounting, or the structure of the ledger, who can view, who cannot view the ledger. Everything is pretty much controlled by smart contract and protocol. Now, another last, the most important thing. Even if you attack one of the server, and change something, all others have the copy of the ledger, and immediately the protocol will reject that change, because that change did not happen because of the consensus. So that means if you want to manipulate or mess up with data or hack an blockchain application, you need to attack more than 51% of nodes in the system. Now, let me tell you, if this bookkeeping is happening on one server, attack that server, you can manipulate. But if bookkeeping is happening on, say, hundreds of thousands of servers or nodes in the network, then you need to attack 51,000 nodes in the network. All the transaction data is being stored across all the nodes as copies, and 51% of the nodes should be attacked. So compared to centralized and distributed models, decentralized models or blockchain systems are more robust. But of course, it also has, see, in nature, every system is breakable. But how tough is the question? So insider attack not possible because it is protocol driven. External attack is very tough because 51% of the nodes are to be attacked. So that way, the ledger is not maintained with one central authority. Rather, the ledger is maintained across multiple nodes in the network. That is why blockchain is called as a distributed ledger governed by a peer-to-peer network. Now, this network, if the nodes are maintained by public, it is called as public blockchain. If the nodes are maintained by private organizations, it is called as private blockchain or permissioned blockchain. And the beauty is, though the ledger is available with every node, on an application, who can view what can be controlled in a permissioned blockchain. So don't think that how can we put all the business data or transactions, everything on a public ledger? Everyone will see. That is a secret data. That is, I mean, that is a data of privacy. So here, it's not the actual data which is going on to blockchain. It is the hash of the data or the digital footprint of the data which is going on to blockchain. So in that context, your data is still secured. Still, the typical controls you have with respect to who can view and all is still there. But only thing which is eliminated is ability to tamper the data, ability to change the timestamp of the data, ability to do some hooking the books in the system. All these things are eliminated. And I think in that context, blockchain is something which is coming. And of course, you all know, bookkeeping is not just about keeping books or recording profits and losses. It's about business's own narrative. And that narrative maintains the integrity of the businesses itself and its connection to the world. Of course, this is quote by some random person whom I don't know. But I felt the importance of bookkeeping or accounting is something which can be highlighted. So what I want to present is now the context of accounting. How this technology is changing the concept of accounting. Now let's look at the emergence of triple entry accounting. Single entry is nothing but you're just putting all the transactions. It's one-sided accounting, and there is no counterparty who is also storing it. You're just putting it. And this happened 5,000 years ago. So initially, the accounting used to be single entry. But what happened with double entry is instead of maintaining one ledger or one copy of ledger, the accountant keeps two, one for incoming and other for outgoing. But the point is, even with double entry, there is an issue. What is that issue? The trust issue. How? Because there is no connection between the two different sets of accounts. Because someone is saying this is incoming, but there is also someone else who is maintaining a record who says there is something outgoing. Now, the connection between two different books or two set of books is what brings the problems with respect to the ability to verify. And there is no transparency. Now, what blockchain does is you have a book where there is a debit. You have a book where there is a credit with respect to the debit. But there is also another book, which is public blockchain, which captures both debit and credit as an entry. And this is which is tamper-proof and verifiable. So blockchain can facilitate an economy-wide accounting system. And this is the concept which is happening, okay? And there is a lot of efforts happening across the stakeholders for this to happen, and it will take a lot of time. It's not that easy. Because from single accounting, which happened 5,000 years, we moved to double accounting 600 years back. And triple entry kickstarted hardly 15 years back. And there is a lot of changes with respect to the integration between the various stakeholders and entries. So it will take a lot of time for this to happen. But this is a new concept which kickstarted and a new possibility which is made possible with technology. Now, why blockchain will improve the transparency? Because all the stakeholders in the system are maintaining a copy, and it is very tough to lie when everybody is watching. That means every can verify the integrity of a transaction on a public ledger. So this way, one entry by the outgoing, one entry for incoming, but there is also a neutral player called public blockchain who is capturing both the entries with a timestamp on an immutable record of blockchain. So this way, blockchain is trying to come up with this new system. And the beauty is all these accounting entries are cryptographically sealed by a third entry, and it works as a deterrent towards manipulations and financial fraud. And today, all this effort is being taken by government by creating a centralized server and integrating all the people to this one single server, which is very, very tough. And it is very rudimentary way of doing things. But now that new technology advancement has come, things can become little lightweight. So what is the future of accounting? Now, this is the future of accounting. A self-auditing accounting ledger is probably the most conclusive application of blockchain with respect to accounting. Oh, self-auditing. Yes, that is the future. Because today we are seeing automation everywhere. And the way accounting, the reconciliation, the audit trail happens is also becoming automatic and protocol driven. How? Let's see. So let's look at the benefits of triple entry accounting, which is a possibility being created by blockchain. One, verifiability. Because the transaction is encrypted and hashed on a public blockchain, anyone can verify the transaction without looking at the details. I can verify the integrity of the transaction, but I need not look at the details of the transaction. So this is called as zero knowledge proof. So blockchain facilitates that. One. Second, tamper-proof records. Third, automatic reconciliation. That means once a transaction is recorded on blockchain by one of the two accountants of a company, the other party can also view the particular double entry automatically and have it recorded on its own books. So this is called as automatic reconciliation. And fourth, it is foolproof. It will reduce the chances of errors, frauds, and manipulations. And it is non-biased because it is protocol which is governing it. It's not human. Fifth, audit trail, perfect audit trail. Why? Because every transaction has a timestamp. Every interaction has a timestamp. So you have everything arranged in the chronological order. And even if someone changes something, that is also captured as a transaction, as a new entry. So don't think that this system will not give the ability to change something in the front end application. It will give option to in the front end. But even if you do, even if it is a legitimate change, it is captured as a entry in the back end that this is the change which happened. And that goes as a transaction in the back end. And last but not the least, smart contract. So all the business rules, say there is an invoice processing, for example. Let's take an example. There is a buyer, there is a seller. Seller has fulfilled the shipment and the buyer has given an invoice. Now, the rules in the agreement with respect to how this invoice is to be processed is codified as a smart contract, and the smart contract will automatically do a transaction. That means smart contract captures the transaction plus nature of transaction, the rules based on which the transaction is done. So that way, any miscellaneous transaction can't happen beyond the business logic of the smart contract. And whenever a smart contract is executed, both the nodes of the parties or both the servers of the parties will execute at the same time. Both does the consensus and then that gets into entry. So this way, everything becomes seamless, automated, but also verifiable and facilitates audit trail. So these are some of the benefits of triple entry accounting. So I'll take another couple of minutes.
No, carry on. It's fine.
Yeah, because I think Anju joined already.
Yeah,
so.
Anju joined. It's very interesting. You have actually, you are explaining in such simple language. I think most of the people will be able to actually very correlate with the things, because what happened traditionally, the speakers whom we hear on YouTube and other things, they don't make it very relatable, but you speak so simple in so simple language. So it's personally for me, I'm getting a lot of insights, which is actually hard to break that barrier. So I think it's very useful for people. Yeah. Carry on.
Okay. Sure. Yeah. So now I took a very real world use case and built a case for you all so that you can understand how blockchain can be leveraged for accounting and commerce. And of course, we all know commerce system is the enabler of financial system, right? And we all know that while commerce captures the interactions between the entities, the financial system captures the transaction data. And traditionally, if you look at commerce system and financial system are two different systems, and all accounting happens is with respect to correlating this data. I mean, this is my understanding. And there is a lot of compliance, reconciliation, audit, so that every reconciliation happened properly or not, or correlation of data or proofs of the data is captured properly or not is what most of the CAs or CPAs would do and sign. I think that is my understanding, and I hope that is right. So the point is, today, if you carefully observe, there are certain challenges or addressable challenges in this commerce and finance system with respect with respect to blockchain. One, lack of integration of financial and commerce system. Now, today, if you carefully observe the legacy applications, you need to maintain multiple ledgers. One ledger to digitize the facts and contracts associated with transactions, say like quotes, purchase order, invoice, payment, receipt. All these are captured on commerce system. But on the finance system, it is one transaction which is captured. What is that? This much amount moved from this entity to other entity. That's it. You don't know what is the nature of transaction. You don't know for what purpose it happened just by looking at the financial system. You need to correlate both. So there is lack of integration of financial and commerce system today. Okay, both applications work in silos, and then there is a database again which is to sync, and there is a lot of human intervention to verify whether everything synced well or not. And there is also scope for manipulation, because you can have one thing in the financial system, but you can change something else in the commerce system to make sure both look good. So this is one of the traditional problem, because all these systems are centralized. So obviously, with respect to commerce systems, there is a lot of scope for changing the data, creating documents, and this creates lots of trust issues. There is a lot of trust gap today, unfortunately. Second, most of the ledgers are transaction centric. If you look at financial ledger, like say bank statement of a company, it is transaction centric. But the documents associated with them are maintained in a separate system, which is very tough for verification, audit, and reconciliation again. I'll give you some examples in coming slides, but this is another addressable challenge. And third, credit worth discrepancies. Today, businesses have become so volatile, and credit scoring algorithm complex to check the various financial and business parameters. And still they can be fooled by cooking the books. Now, one of the best example, I worked on a blockchain application for trade finance. Now, today, if you carefully observe, the buyer and seller can collude and create a false shipment, false invoice, and they can get an invoice financing from a trade finance player. Do you think it's possible? Yes, it happens. Invoice financing, fake invoice financing is one of the biggest problem, because the buyer, seller, you will use their ERP applications to generate the purchase order, shipping bill, goods receipt note, and all these documents without actual supply chain being captured on a separate IT system. Now, a traditional trade finance player do not know or don't have visibility to what happened on the supply chain. They only know what happened on the commerce application or IT. But with blockchain, the supply chain, and then the documents associated with the transactions, and also the timestamps of all these interactions can be captured and verifiable by trade finance players, so that fake invoice financing can be curbed, because every interaction is being captured. Now, an airway bill or a shipping bill issued to a logistic player, now logistic player is also brought into the system. So the point is, today there is a lot of data silos, and blockchain will bridge all these data silos and creates a shared data or a shared database which is accessible by all the relevant stakeholders. As simple as that. So that way, how blockchain can be leveraged? One, all documents and relevant state change is associated with a transaction can be mapped with blockchain. Because on blockchain is also sometimes called as financial internet. That means on this blockchain application, you can do transactions. You can also do document capture or document storage immutably. That means transaction is happening on the same application, and the document which is issued against the transaction is also captured in the same system. That is why all the central banks today are coming up with central bank digital currency, so that ERP applications can become interoperable with the CBDC applications, and I can program my business logic or contracts and can do automatic transactions automatically. So the information layer and the financial layer, which is used to be separate, are combined with blockchain by creating a new era of financial internet. And today's semantic web, with semantic web or AI, machine learning kind of algorithms, you can create knowledge graph of all this data scattered across the systems and pull them together. And you can do commerce modeling, secured interactions, and bring verifiable data. So now the insurers, banks, investors, stock traders, all these public limited companies can actually give 360-degree view to their data, financial statements, which is verifiable without actually showing the specifics of the data. So these are some of the technical abilities which are being leveraged. And what is ABCDs of blockchain? A is authenticity, B is visibility, broad visibility to what is happening in the system, consolidation, and decentralization of the IT governance. See, don't think decentralization means there is no control. That's not the case. Decentralization means multiple stakeholders are governing the system so that no single player can fool the system. That's it. And next, hashing, timestamped data, QR code on a document, which can bring the metadata. So there are a lot of technical things again. Now let me tell you the case study. If you look at the case study, this is an actual application in production in India called Param Network. Now what these people did is they brought up with a protocol to democratize the finance and commerce systems to integrate and give more trust and verifiable data. So let's look at the solution now. So as I already highlighted in the previous discussion, the finance system is separate IT system and the commerce system is separate IT system. The financial system is capturing the sender and receiver, there is money movement, whereas commerce system is capturing the code to purchase order, invoice, all these documents. Now, what happened is the proof of sales receipts are necessary to claim validity of contracts associated with purchase. And today, all the underlying finance systems are developed in isolation from the commerce system, and they need to be unified, which I already gave the enough background. Now, what these people did is they came up with combination of two technologies, blockchain and AI or semantic web. All the transactions happening, there is a triple entry happened on a public blockchain so that once both the parties came into consensus and agreed on a transaction, now that entry is on blockchain. So both the parties can't deny it. No discrepancies, no quarrels, no manipulations possible. Second, all these transactions and their associated documents are mapped through this semantic web called as com graph, which is a knowledge graph. And people can easily access, the auditors or the verifiers, whoever, whatever might be the purpose of verification, they can quickly pull a transaction, look what is public data, which is which can be given for access externally. And there is a document associated with it, which can be also verified. So this way, they created a platform, and because of this, all the companies are able to they could raise investments, because now that they are using this, the investors trust them that, okay, these people are transparent and these people are they are worth trusting because I can verify everything. And second, the trade finance players are comfortably able to give the loans, because today what happens, once a loan is given, the businesses may go out of business. Who knows? But because of this public information, at least the trade finance or the banks are able to see the consistency in the business, or able to at least verify what is happening in the business. What is the volumes of transactions happening, or what is the volumes of data. So whatever that companies are willing to showcase to them, they are able to show it, and the verifiers are able to verify, and everyone is happy. It's a win-win value proposition. And this is how blockchain is bringing transparency, trust, integrity, verifiability, automatic reconciliation, and automation. So this way, blockchain is changing the nature of accounting